You're watching News at Prime. Let's bring you some business news now. The South African Reserve Bank's Monetary Policy Committee has kept the policy rate unchanged at 7.5%. 4 members preferred this action, while 2 were in favour of a 25 basis point cut. Well, let's talk about this now with my colleague Tumisang Ndlovu, who has been out and about today, getting some views about the Reserve Bank's decision. Tumisang, good evening to you. Let's talk about the significance of a hold in the repo rate.
Thanks, Koli. Good evening. The significance there is of relief, particularly because a hike, of course, is not something that South African consumers would have liked to see, but a hold being a bit of a measured response from the Reserve Bank. The question, though, that has come up is whether this signals an end to the easing cycle when it comes to monetary policy. For more on that, I'm joined by Gina Schoeman, who is a chief economist at Citigroup. Gina, thank you so much for your time. This was expected, but does it mean that the South African Reserve Bank has stopped in terms of an easing cycle?
I think for now we would call it a pause. We don't expect any more cuts from here on. However, and there's always the however, in a world that is so uncertain right now, a global world, especially because of the US geopolitical tensions, there is still a chance, and we must look towards the May MPC meeting. If the data on CPI really surprises to the downside, or if some of that risk really substantially reduces, there might just be space for one more rate cut in the cycle, but I don't think you should be expecting much more than that.
That's what consumers want to hear. And speaking of the South African consumer, what type of feeling and maybe relief does a hold provide?
Well, I think the benefit to hold is that the SARB continues to be ultra cautious about inflation. And as much as consumers like interest rate cuts for those who have the type of debt that they receive that benefit from, for South Africans in general, lower inflation for longer is so much more beneficial. So at least the good news here is that even if it isn't a cut, and even if we don't see any further cuts, we have a central bank that is so strict on inflation, they do not allow it to rise above the target they set. And the benefit there is for everyone, low income all the way through to high income. If price increases are kept as slow as possible from rising, that's going to benefit everything that you spend your money on. Interest rates, of course, only benefit what debt you hold, and not everyone in this economy holds debt.
Absolutely. On the inflation front, though, we do know that the 2025 budget was finally tabled, and with a reduced VAT hike of a 0.5 percentage point. How does that play into the area of South Africa's inflation, as well as inflation targeting as a matrix that the Reserve Bank uses?
It's a bit of a mixed bag because you do have the VAT hike. Even though it's smaller at 0.5 percentage points for 2 years, it still adds about 0.2% to our inflation outlook. That's very small, which is probably adding to the cautious stance by the SARB. They're not sure what's going to come as of it. But maybe in a medium-term perspective, over a longer period, what we really need to do is reduce the fiscal uncertainty that has been provided now because of the budget postponement and not knowing whether the budget will be approved. And that's why May is still something that we can look at and say, well, maybe there's still a chance of another cut. If by May the fiscal uncertainty has been reduced and the budget's been approved and it's business as usual, together with geopolitical risk going away, which doesn't look likely, then maybe May could see an interest rate cut. But at this juncture, we would say probably on hold for longer.
How much of an impact does geopolitics play for a South African economy? We do know that there are concerns around US-South Africa trade, but at the same time, the US Federal Reserve has also taken quite a cautious stance, and we are often compared as South Africa's central bank with our counterpart there.
Well, the Fed is likely to cut rates, and quite significantly. We at Citi expect 125 basis points in cuts by the Fed through this year. But geopolitical risk for a small open economy like South Africa, where you have an incredibly volatile currency that is highly tradable, it is significant, particularly when South Africa has got rising tensions against the US. So it certainly doesn't mean that just because the Fed cuts as much as they are expected to cut, that we'll be able to respond with something quite similar. That risk premium in South Africa has risen simply because of the uncertainties around what is happening with US-South Africa relations.
Overall, would you say the market received a hold quite well?
Yes, I would say so. It was in line with consensus, and we still have the market pricing for a slight chance of another cut in May. But cautious is better for South Africa because of that risk premium. And that central bank of ours, as hawkish as they can be, just continues to hold down inflation, which is seen as ultimately probably the best thing for this economy.
Thank you for your contribution. Gina Schoeman is a chief economist at Citigroup. They're giving us a reaction to that decision by the South African Reserve Bank, a hold on the repo rate at 7.25%. For now, there is, although, a little bit of hope in future monetary policy decision-making that South Africa may see at least one more cut when it comes to the interest rate. That's how we wrap it up on the business desk, well, outside on the streets this evening, and we take a look at market indicators as the JSE has closed for the day.